The first rule in investment is don't lose. And the second rule in investment is don't forget the first rule. And that's all the rules there are. I mean, if you buy things for far below what they're worth and you buy a group of them, you basically don't lose money. I'm a net buyer of stocks. I've been buying stocks ever since I was 11 years old. So when stocks go down, it's good news.
How do you time the big market moves so well?
The interesting thing is, obviously, we have the faintest idea what the stock market is going to do when it opens on Monday. We never have had. We have never made, Charlie and I don't think, in all the time we've worked together, and I'll tell you something later on maybe about how learning takes place, but we have never, I don't think we've ever made a decision that where either one of us either said or been thinking we should buy or sell based on what the market is going to do. No. Or for that matter, on what the economy is going to do. We don't know. We have not been good at timing. We've been reasonably good at figuring out when we were getting enough for our money. And we had no idea when we bought anything. Well, we always hoped it would go down for a while so we could buy more. And we hoped even after we were done buying and ran out of money that if it was cheap, the company would keep buying, in effect taking our interest up. I mean, that's stuff you could learn it in fourth grade, but it's not what's taught in school. Some people should not own stocks at all because they just get too upset with price fluctuations. If you're going to do dumb things because your stock goes down, you shouldn't own a stock at all. No, I mean,
what are dumb things? Selling a stock?
Yeah, selling a stock as it goes down. I mean, if you buy your house at $20,000 and somebody comes along next day and says, I'll pay you 15, you don't sell it because the quote's 15. You look at the house or whatever it may be. Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business. And the longer you hold stocks, the less risky they be.
You don't need tons of IQ in this business. I mean, you have to have enough IQ to get from here to downtown Omaha, but you do not have to be able to play three-dimensional chess or be in the top leagues in terms of bridge playing or something of the sort. You need a stable personality. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd, because this is not a business where you take polls. It's a business where you think. And Ben Graham would say that you're not right or wrong because 1,000 people agree with you. And you're not right or wrong because 1,000 people disagree with you. You're right because your facts and your reasoning are right.
In terms of...
Yes, man. Hey, welcome to the Money Flow Trading Society's channel. This is our Sunday service, man. We're here to talk about the markets, life, decisions. The stock market is chaos. The less you know about it, as you look at it, if you watch the news, try to use logic, things you think you know, the stock market can confuse you and it can seem chaotic. Companies can have good earnings and stocks go down. Companies can have bad earnings and stock price goes up. It's a world of chaos. The money flow is not only a trading strategy, but it's a way of seeing the stock market. It is a way of seeing price movement, price action. It's a way of looking at and determining, trying to decide how best to place your money. See, the thing about the stock market is whatever you want it to be, it can be that for you. If you want it to be this passive machine that just appreciates 9% a year over time and you just dollar cost average and put money into it. And one day, that day that you decide to quit working, it'll be a big pile of money for you there. It is that. That is one thing that the stock market is. And see, the truth is about 70 to 71% of the time, stocks move up, man. They go higher and higher. And every so often there's chaos. People try to blame it on this. It's the Fed's fault. It's fucking rigged. Last 20-something years I've traded, I've heard how the stock market is rigged. It's always rigged. The bankers, high-frequency traders, the day traders. It's always something. Meme stocks. Something's always causing problems. Something's got to be the scapegoat. See, price moves every day, swinging in this pendulum from extreme high to extreme low, and it just swings back and forth a lot like you. I always felt like inside of me, I had two people. Wrote this little ebook called The Two Selves, and then there I talked about this. There's two people, man. One of them's like 14, sees the world through rose-colored glasses, believes it can do anything. The other one is woe is me. All the problems, and it fixates on them. Thing is about the stock market is that all of your life, it's gone higher and higher and higher and higher. And every so often it drops. In the world of stocks, it has its own vernacular, and we call that volatility. It's where stocks go up and down. Or we could call it a pendulum that swings from one extreme to the other. See, price is always seeking out true value. How much is this company worth? How much is this stock worth? But a lot of times it's how much is it worth it? 6 months from now, a year from now. It's not right now. It's how much is it worth in the future. Stocks are a lot about not what did you do for me today? What are you going to do for me tomorrow? And when you first get sucked into the markets, they look easy. See, on the surface, trading, I mean, it looks so simple. Truth be told, trading is quite simple. Couple clicks of the mouse and man, you're trading. You don't need a license or a permit or even sophisticated machinery. You can do it right from a phone. You don't need any permission, man. If you have enough money to fund an account, you can start trading and you can lose every penny. Hey, maybe you 10x it. I don't know. That's why we got to study. And like a lot of people, I came to the stock market and man, you got to understand there's trading. I view the market in 4 ways. There's extremely short-term day trading. That's your day trading, scalping. Basically same shit. Different rules. Day trading, scalping. Trying to make your money right now. And then there's people it's like, hey, I'm going to give it a day, a week, 2 weeks. Call these swing trades. And the difference between a day trader and a swing trader is time. T-I-M-E, time. Time is also one of the 3 components of the millionaire code. Time times amount times yield. Let me take this down. Time times amount times yield. And time. Time. This is the chart of stock. A-I-R. Air. You'll see on this chart. Let me take off this. I've taken off all the indicators. If you're brand new to the stock market, this right here is a window in the soul of stock. These little bars, some people use candlesticks. You see, we already got diversity. There's a lot of ways you can go left and right. A lot of ways of seeing the market. There's a lot of strategies, man. I spent tens of thousands of dollars on books and courses, newsletters, seminars. Even played around with automated trading systems. Man, it looks so simple. You combine the ability that anybody can do it with. Fuck you. You don't need money to trade. You need money to make money at trading. So you can learn without any money. You can paper trade. Now, everybody does that. They go to college. They go to truck driver school. They go to this. Trading, man, they just throw money in and start fucking clicking. It's one of the few places where people do that. Truth is, though, see, then we got people that do what we call position trades. They're trying to ride a stock, either up or down, long or short. See, the market moves in 4 stages. And I believe it moves in 4 stages. Some people believe it moves in 3, up, down, or sideways. And that's true. But I believe it's more like a pattern. And I trade a pattern. And it's not perfect. But it does give me a repeatable process around the idea that stocks move up 70% of the time and 30% of the time what we call volatility. they move to the downside. And volatility, truth be told, is just opportunity. See, without volatility, without the movement up and down, there is no trading business. So we need that. There are no swing trades if prices don't move. So as a trader, much like a gambler, we have to be ready, be used, and be okay with volatility.
What's going to happen in a day or a week or a month or a year even? I've never felt that I knew it, and I've never felt that it was important. I will say that in 10 or 20 or 30 years, I think stocks will be a lot higher than they are now. Prices don't tell me anything about a business. Business figures themselves tell me something about a business, but the price of a stock doesn't tell me anything about a business. I would rather value a stock or a business first and not even know the price, so that I'm not influenced by the price in establishing my valuation, and then look at the price later to see whether it's way out of line with what my value is.
Any word of advice you give to somebody who's a young investor who would like to emulate you, what you would recommend that they do to kind of build something close to what you've done?
I think you should look for the job that you would want to hold if you didn't need a job. I mean, you're probably only going to live once. Shirley MacLaine may differ with that, or a few people, and you don't want to go sleepwalking through life. And you're really, whether you make X or 120% of X, really isn't remotely as important as to whether, in most cases, you marry the right person and you also find something that you would do if you didn't need the money. And I've had that job for 50 or more years.
Passion. I'm sure you've had something in your life that you think about continually, even when you're not doing it. I think about charts a lot. Being passionate about something cannot be faked or learned. Being passionate about something, in fact, it just seems to happen and is one of life's rewards. I got that way with the stock market. When I first learned about the markets, I'd first learned about real estate, and I'd been buying some houses, and I had 3 or 4. And the same guy that told me about houses mentioned an IRA. And to be honest, I wasn't thinking much about an IRA. And through that process of reading about IRAs, and he was like, man, you should take some of that cash flow from those properties, i.e. from your job, i.e. from whatever side hustle. Take some of those, take those profits from that thing or work, wages, and put them into these stocks. And back then the IRA was very popular. He says, hey, not only that, you'll get a tax break. You'll get to lower your taxes. Through that process of learning about dividend stocks, I came across this strategy called Dogs of the Dow. And it's in my free ebook. You go to chapter 10, and pretty simple strategy. And the reason that strategy works is 70% of the time stocks go up. And along the way, you're getting dividends, and periods of volatility where prices come down, your dividends compound cheaper, and you're able to purchase more shares. And, to fast forward this story, I began to study the idea of charts. And this is a chart, which you see here. And each one of these bars is one day. And one of the things that I began to figure out, there's 1, 2, 3, 4, 5. There's 5 days. 1, 2, 3. And I began to, you can learn about moving averages and these indicators. And the one you see here in the green, this is a simple 20-day moving average. Now think about 1 day, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So from this price to this price, the average is this price. And you can almost see that by eyeing it. Can't you? Meaning it's just the average of this price down to this price in visual form. And so that lets you see in relation to today's price compared to 20 days ago, which is 20 trading days ago, which is 1 month. There's 5 days. So this was Friday, Thursday, Wednesday, Tuesday, Monday, 1 week in that block. Friday, Thursday, Wednesday, Tuesday, Monday, another block, right? And it would be, right? We take that all the way down and boom, 20 trading days. And what I began to learn about this to keep that simple is this nature of practicality is not a word, but the fractal layer of time continuity, that time. As you begin to study, there's different ways to see the stock market. There's day traders and scalpers. Then there, what we said are swing traders, right? So a swing trader, in the way that I swing trade, is I look for price to move sideways after a sell-off. How do you determine a sell-off? Price moving below the average price of the last 20 days, which is 1 month. See the layers of time here. Hope you understand this. From this price to this price, when we get 20, we're going to get an average. Well, if price is on this side of it, we know it's trending down. Now all we need to know is how do we tell when it's stopped? And at the same time, we don't know where price is going.
And I was lucky in that I sort of found early on what turned me on that way. But don't settle for something if you can possibly. Don't worry about making the most money this week or next month. I mean, when I offered to work for Ben Graham, I said I'll work for nothing, and I meant it. You know, I mean, just the idea of being turned on. So look for the job that turns you on. Find a passion.
You had 2 world wars, and you had a Great Depression, flu epidemics, all kinds of things. American business will do fine over time, and if you own a piece of it, and if you don't beat yourself, the only person that can cause you to get a bad result in stocks is yourself.
In other words, time consistently over time, stocks go up about 70% of the time. They average about 9% a year. So we can define a quantifiable edge that over a period of time, these quality assets, these, is it every stock? No, but it's most stocks. And I began to define this in what I called stages. And there'd be one stage where I would try to catch stocks going sideways after they'd come down. And I began with all that at 1. This is not proprietary. Just as I'd read different people's stuff, price would run up. And I was like, man, how could we anticipate that it's gone far enough? Because here's what I know. They don't just keep going up and up and up. And along the way through my studies, where's it at? I began to read and learn about indicators. I began to study stuff like the RSI. Created by Wiles Wilder in the 70s. I have an original copy of his book. It used to be calculated by hand. And it would measure time continuity. Back to time again. It would measure 14 bars. Think of this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Right there. So from here to here, it's measuring. Watch this though. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. See anything? Notice anything? If you notice in these 14 bar runs, what happens? It starts to come down. Could that be a pattern? Could be. What about when it first did it here? What do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. But then look, keeps going. And so if price wants to keep going inside of the money flow, we understand time. We also understand we don't know. So we begin to downsize if we're trading into that momentum run. If we're buying holders, may do nothing, or maybe you harvest some profit. I'd rather harvest it from here than down here. And if you haven't noticed this pattern that's taken shape here, and I know I'm drawing all over it, I'm doing it just sloppy, and we're not even counting bars, but I'm just trying to get you to see the time continuity process here. Price of, look at these full moves. And so these are indicators. And these are things that I began to use through my story of learning about stocks spending time every day with the charts. Originally, when I did charts, they mailed them to my house once a week. Then I finally got to the internet and I could download them. Been doing it that goddamn long. Don't seem like it. Started early, but now I'm 54. Technical analysis, the main tool many traders use to determine the direction of price. As a trend following trader, and I'm looking to follow the trend, the uptrend, price moving above the highest, the average price of the last 20 days. This price moves up and drifts up into the stage 2 of the markup, the uptrend, beautiful thing that is the opposite of a downtrend. Yin and yang, high tide, low tide, love and hate. Bipolar nature of the universe and of you too, my friend. You say, maybe I'm calling bullshit on this. Stocks always go up. 1914, February 1915, Dow Jones, 2,000 points, 2,200. Today, what are we at? 30-something thousand. Go look. You got periods up and down, but generally it goes up over time. More people, more investment, more money, capitalism goes on. That's what Buffett's talking about. Keeping the faith, trying to turn chaos into cash, mechanics, time in the market, accumulate wealth. That's what we're trying to do. We want to take advantage of these down moves. We want to spot them, right? This is current chart, the Dow Jones Industrial Average. We've had a nice down move. Now notice, put in a thing here. Look at these. Now look, we had one there, started to run, then came down. So it didn't work perfect there, but then what happened? Look at this beautiful run. And until price began to move sideways, remember we said it can only move sideways, up, sideways, or down. As I try to draw out the pattern, I kind of expect it to come down. But if it doesn't and it goes up, then I assume we're starting over. Sideways, up, sideways. And so I begin to play this fractal pattern. And this is where it has all the indicators. But on this chart, I want you to see it clean. See the chart, man. Each day. But what if we took it from a day to a 1 minute? You see something there? Look. Just the general flow. Now, the dots and spaces, that's because there's not enough volume. Nobody's trading this on that time frame. But watch this. What if we went to the NASDAQ? 1 minute, we trade this. Look at this. You know, can we spot it? And then, obviously, there's more involved. I'm just trying to get you to see the pattern. Money flow in the 4 stages of price move. Stock market goes up as much as 71% of the time. The problem is it's not a straight line. Price can only do one of 3 things: move up, move down, move sideways. I believe price does this in 4 stages. By identifying the stage, we can better allocate our buys to take advantage of a sell-off, stage 4 decline, and maximize price increases to take profits during stage 3 distribution zones. That's up in here. Let me give you an example. Take this back. Put in delta. Let's put it in here so that we have the RSI. What do we see? Just steady climb. And maybe on the next one, we'll get into that. How we can use the alignment of these moving averages combined with these daily bars with the idea of time continuity, right? These layers of time based on it. Are we day trading? Are we scalping? Are we swing trading? Are we position trading? Or are we buying and holding? Are we dividend trading? Based on our time, based on what it is we're asking of the market, we can use these indicators, use the money flow trading system, lay it over it, and bucketize. I mean, I usually set up different accounts because it's different strategies, different process, but it's all inside of the same market. It's like, what is it you're asking of it?
You're investing. If I'm going to buy a half interest in a McDonald's stand and you're going to run it, or McDonald's franchise, you're going to run it, I look to the business to determine whether I made a good investment. And I'm concerned about, whether we have new competition, how we do over the year. But it's the business I look at. When you're just looking at the price of something, you're not you're not investing. You'll have a hard time finding a person that's had a wonderful experience, a delighted experience in purchasing anything that isn't going to come back. And similarly, if the memory is of rudeness, indifference, whatever it may be, they're never going to come back. And as a small business owner, and as you grow, you have to not only be able to project that interest in people's well-being, in delighting them yourself, but you have to do it through other people. And you won't be able to do it through people who themselves do not feel they're being fairly treated, that their views aren't appropriately considered. So you really do have to learn to multiply yourself through other people. By far the best investment you can make is in yourself. I mean, that, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, both in writing and in person, they increase their value at least 50%. I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas. And that's relatively easy. I did it myself. And if you invest in yourself.
Most quantifiable method of technical analysis is a reactive approach. This method of technical analysis doesn't attempt to predict, but it reacts to what price does. Price itself dictates actions to be taken. It doesn't try to guess or get ahead of the market, but respond to it. One of the things we do, if you go to page 35 of the Peters report, each week I put out this thing called the Money Flow Playbook. And it's like, look, I don't know where the market's going. I'm reacting to what it's doing. So I don't know if it's going up, but when I get a solid stage one, I get an anchor point, I get a previous high that I can use as a profit target. The rules of what I'm doing have lined up. Market tends to go up. Tends to do that from a bottom. So I'm using time, bars being built, but I don't know for certain. And so at the end of this move down, it moved up. At the end of this move down, it moved up. End of this move down, it moved up. End of this move down, I'm expecting it to move up. And so I can use basic if I'm a trader, my time frame is not very long, right? And inside the money flow, I believe price has memory. So I'm going to set targets, one previous highs, and the other one is what? Using the RSI. You might say, well, why use that RSI? Remember, we were back over here. Let's pull up our chart on air and pull back up our RSI. Oh, it's on there. Oh, it's at the bottom. Excuse me. And this indicator is a tool that technical analysts or us chart readers use to help determine the possible direction of price, because we're following a trend. But we can look at charts and say, okay, 14, 15 bars into this, if this thing is extreme, it tends to pull back. So as a trader, I want to take advantage of this common repeatable pattern. But you know what? It might keep going. So one of the things I'm able to do is create a repeatable process of one, taking down shares, lowering my risk, and then I can move up my stop or stop loss to either break even or into the trade, guaranteeing profit. Now, boom. And if I can do that each time, I got to win more than I lose. That's the game of trading. And so we try to create a quantifiable edge. And I think the quantifiable edge is that over time, stocks move up. If I can pick quality companies, if I can get them at the right price, combine fundamentals with technicals in the right setup that's repeatable, then I think over time, I'll have a quantifiable edge. That's a positive expectation of profitable trades. Then I just need to narrow down what markets, and that's this. What is it I want to buy and sell? And I always push people to first index funds, then the dogs of the Dow. These are great stocks. And then you dig into position sizing, and that's different for everyone. See, the game is fractal. It's fractal, just like charts. Charts are fractal. A fractal is a never-ending pattern. Fractals are infinitely complex patterns that are self-similar across different scales. They are created by repeating a simple process over and over again in an ongoing feedback loop driven by recursion. Fractals are images of dynamic systems. Fractals are pictures of chaos, man. Geometrically, they exist in between our familiar dimensions. Fractals patterns are extremely familiar. You've seen them in nature, the beach, as the water flows in, as money flows in, and money flows out as the water flows in. You see them in snow, you see them in the weather, and you look, oh, it might rain. Well, that's a fractal pattern, meaning the sky, the clouds look the same. We see them in seashells and Fibonacci ratios, numbers and math. So we're able to use the 4 stages to enter trades, to exit trades, to the structure that markets build, that chaos. We try to turn it into cash by creating market structure around indicators, around the idea that price tends to move up, around the 4 stages of price movement, using risk management with stop losses and profit targets. And we know what our exit looks like based on our time frame, man. So based on your time frame. And this is what you got to know. The market is always going up. It is always giving out money, and it is always there every day for you. You got to master it. And listen, you don't need money, man. You don't need money to trade the stock market. You need money to make money in the stock market. But in the meantime, I would encourage you to get the skills, man, that you need. Get those skills. Get the skills. And then get the skills, man. Use the paper trades. Write it down. Begin to follow the same things. Get in there in your folders and build these up, man. Get in here, swing trades, meme stocks. Build your own list. If you want to follow my MFG trade ideas of the week, click view all. These are ones that I'm publishing. Now look at this on AI. Look at this big sell-off, man. Look, MFG, look at this big sell-off. What's up, man? I see you there. What's up? Look at this big sell-off. And look at I said, possible resistance. It didn't hold, man. It never even triggered. Price never put in an anchor. It never broke over the trigger if you've got the money flow trading system. They never really started to go sideways until we hit an anchor and actually started to go sideways. And so now this is a trade we open. And I'm going to try to run it up in, I think we're going to run into trouble in that. The previous support tends to become resistance. But if we get through, and so the risk of losses down here, the risk of reward is up here. That's a huge spread in a stock that's been very volatile. So I think this is worth the play. I think it's worth it. So AI, we'll see how it goes, man. You guys be good.